Markets in limbo, oil, Mideast tensions, and central bank uncertainty stir global caution. As the curtain lifted on a crucial week for monetary policy and geopolitical calculus, global markets showed a nuanced resilience on Monday, trading cautiously amid rising tensions in the Middle East and a flurry of central bank decisions that could set the tone for the rest of 2025. The MSCI All-Country World Index inching up by 0.2%, with Europe's STOXX 600 gaining 0.3%, masks a deeper current of unease. The world's financial pulse is being shaped by two intertwined crises: the escalating hostilities between Israel and Iran, and the delicate global interest rate environment teetering on the edge of shift. This financial inflection point arrives during a pivotal week. The US Federal Reserve's closely watched policy meeting on Wednesday could either confirm or contradict market expectation of two rate cuts before December, starting as early as September. On Tuesday, retail sales data in the US will further test investor optimism, while Thursday market holiday in America compresses economic releases and heightens volatility. Meanwhile, leaders of the G7 convene in Canada under the specter of widening geopolitical fault lines and economic fragmentation, further complicating the global picture. Investors, central bank, and energy exporters are central players in this unfolding drama. In the Middle East, the escalating conflict between Israel and Iran injects a dangerous dose of volatility into oil markets. Brent crude held near $73.85 a barrel after last week's dramatic 13% surge. Currency market, in contrast, exhibited a striking calm. The dollar edged lower against the euro, which rose 0.3% to $1.1582, while remaining flat against the yen at 144.10. The Norwegian krone rallied to its strongest level since early 2023, buoyed by the spike in oil, a natural boon for energy exporting economies. In Asia, Chinese markets reacted positively to better than expected retail sales data, with the CSI 300 climbing 0.24% and Hong Kong's Hang Seng Index up 0.7%, hinting at a potential stabilization in domestic consumption. The underlying tension this week revolves around inflation expectation and how they intersect with oil prices and monetary policy. The recent jump in crude oil has stirred fears of a renewed inflationary wave, which could tie the Federal Reserve's hand on anticipated rate cuts. Bain Ladler, head of equity strategy, and Brad Disco BBI observed, the real question is how much maneuvering room the Fed believes it has. Market has been pleasantly surprised by the limited inflation pass-through from tariffs thus far, but energy shocks are a different beast. Simultaneously, the geopolitical crisis adds a volatile variable on an already fragile global equilibrium. Although investor reaction has been relatively muted, the uncertainty could amplify if the situation worsens. Policymakers across the globe are navigating tight monetary corridors. Norway and Sweden's central bank will hold meetings this week, with the latter expected to cut rates. The Swiss National Bank is projected to reduce its policy rate to zero or potentially venture into negative territory again, driven by the unrelenting strength to the Swiss